Hello traders, welcome for another episode of Market Snapshot. Today is the 15th of July 2024 and here are the top stories you need to know about this week. As usual, we're going to start from last week. We've had the CPI figures coming out last week, which had a significant impact on the market. The figures decreased to 3.0% year on year in June, falling below the anticipated 3.1%, down from 3.3%. This lower than expected inflation rate provides the Federal Reserve with favorable data that may support an earlier than expected interest rate cuts. Federal Reserve's Chair Powell indicated that more positive data is needed to proceed with easing borrowing conditions, 23-year high. On other news, on Monday, US bond futures slipped and the dollar firmed as market reacted to increased political uncertainty due to an attack on presidential candidate Donald Trump. This event boosted Trump's election odds and led to a rise in Treasury yields, anticipating inflation and debt from economic policy. Trading was thin due to holiday in Japan, with the dollar up 0.3% against the yen and the euro slightly down. Predict IT showed high odds for the Republican win, now at 66% compared to 60% previous. China economic data missed expectation with lower than forecast GDP growth and retail sales, adding pressure on Beijing to provide economic support. Investors are focused on upcoming US economic data release and Federal Reserve Chair Powell remarks. The market anticipates a rate cut from the Fed in September. The European Central Bank is expected to hold rates steady this week, but may cut in September. Major companies like Goldman Sachs and Netflix will report earnings this week. In commodities, gold held steady while oil prices saw a slight gain after recent declines. On the economic calendar, as I mentioned, we've had the GDP growth rate out of China today, as well as the retail sales, and they came just below the forecast. On 16th of July, we got Powell's speech out of the US, the retail sales, inflation rate out of Canada, inflation rate on July 17th out of the UK, Great Britain, export and import figures out of Japan on July 18th, and unemployment rate out of Australia on 18th of July, inflation rate out of Japan on 19th of July, as well as the retail sales out of UK and Canada. We've got the Euro USD pair up on the screen on a weekly. The Euro USD pair has shown a continued bullish momentum, nearly reaching target of 1.915, which is sitting in line with that strong resistance level before experiencing a minor bearish gap at the start of today's trading session. Currently, the pair is attempting to cover this gap, suggesting a potential resumption of the bullish wave. If it surpasses 1.915, the psychological level at 1.01 becomes a lot more clear. However, if it breaks the 1.084, potentially leading into a decline. The primary catalyst for this momentum was the soft inflation data from the US, which pressured the USD, and this is fueled by investor speculation of the Fed's cuts rate in September. And as I mentioned, we've got some strong data coming out this week with Fed's speech and the retail US data coming as well. So it's going to be interesting to see how it performs. For watching our videos. If you do enjoy our material, please make sure you like and subscribe to our channel. Until next week, happy trading.